Taking a look at the energy markets today, I want to focus on WTI to close out the week. WTI, another mover today, significant mover to the downside. We're seeing continued selling pressure in the crude space to close out the week. WTI lower now for the fifth consecutive session and currently right around the 55.80 level. Now we did see a low of 54.75 intraday. So again, when you look at the trend right now after that spike a week ago Monday, we are now putting in new lows from that spike. And so we continue to see this downward pressure on WTI. Looking at a couple of reasons why we continue to see this persistent selling pressure this week, I think you got to point at Saudi Arabia today. Saudi Arabia indicating that they technically, at least Wall Street Journal reported, that they might have reached a ceasefire with Yemen. So the fact that they are possibly willing to at least alleviate some of those tensions, that's, I think, a catalyst why we saw some pressure on the crude space today. And couple that with the fact that also production is back online. At least that's what the Saudi government is telling people. They're indicating that the production is back up to where it was prior to the attacks. So once again, we aren't seeing that supply disruption that the market had priced in earlier in the week and into last week. Secondly, data. We had some data today that I think was very important coming off the heels of the last couple of days. We saw some builds here in the U.S. in the inventory, so that was some downward pressure. Today, the IEA, the International Energy Agency, indicating that they might even revise demand projections even lower than they already have. They already reduced them a few months ago. Now looking out over the end of 19 and into 2020, they may reduce those demand levels even more so. So I think that's another factor why we saw some selling pressure. Certainly they pointed to China as slowing in China as being one of the catalysts for reducing those demand projections. Also, rig count came out today, and we saw another rig count decrease by 6. So we're seeing, again, the 6th consecutive week of rig counts being lowered or reined in or offline. So that trend continues as well. Now, as I pointed out last week, I just want to say that even though we see the rig counts decreasing, it doesn't necessarily mean we're seeing a big drop-off in production here in the United States, and actually the exact opposite. We're still seeing production levels pretty close to all-time highs, slightly lower, but not relative to the downward trend in the rig counts. And I think primarily, again, the efficiencies in the market are partially keeping up on the decrease in the rig counts. And I think you're seeing that, again, being distributed amongst the other active rigs currently. But this week, downward pressure once again, WTI at the low end of the range for the week and really for the last 2 weeks as we continue to see news coming out of Saudi Arabia that's fairly positive for the conditions over there and negative for the WTI and crude space as a whole.